you might look around the world and see some geopolitical events going on, whether it be Russia and Ukraine or the Middle East. And the average investor might think like, how might this impact my investing strategy, both short term and long term? What are your thoughts there?
Yeah, so geopolitical events get a lot of attention, whether it's war, whether it's terrorist attacks. They're often in market publications. You'll see a Bloomberg headline pop up that can have short-term impact on stock market performance. Research has consistently shown that these types of geopolitical events almost never have a pronounced impact on medium or long-term market performance. So there's potentially some negative impact if you look out 3 months. As soon as you get to 6 months, 12 months, the returns are identical, right? And research has consistently shown that. So I've learned in my career that most geopolitical shocks are not ones to trade around. That doesn't mean that there can't be local impacts. And so if you are in a certain geography, you may be more exposed to a geopolitical event than if you're invested broadly in the S&P 500 or a globally diversified portfolio. So Russia and Ukraine is a great example. So the Russia-Ukraine war, ultimately, we've had fantastic performance for the S&P 500 over the last couple of years as this war has raged on. That's not necessarily the case for German equities, or especially German manufacturing, which has been particularly impacted by Russia-Ukraine. So if your entire portfolio was made up of German small cap manufacturing stocks, you would definitely beg to differ. That geopolitical event didn't have an impact on your portfolio. But broadly speaking, the S&P 500 is a pretty diversified index. We obviously recommend having a broadly diversified portfolio, and geopolitical events tend to not really impact those portfolios for when you look out over a longer period of time.
Sounds like no matter what I ask you about what's going on in the world, what's going on, either macro or micro economy, the answer typically is the same thing when it comes to your investing strategy, and it's focusing on the long-term outputs.
I think that's right. I think that's one of the advantages that most individuals also have. They can think in terms of decades, and they can think about the long-term strategy that makes sense for their goals, as opposed to a hedge fund or a certain institutional investment firm that has to outperform a certain index every single year, otherwise they're out of business. That's not the way that we are set up, right? We are trying to ultimately invest to create wealth over time, over decades, to reach our personal financial goals. And so remaining focused on that can offer a huge advantage in the investing world.